Hello, today is Thursday, November 13th, 2025. Welcome to EPK Capital's daily market briefing. The last 24 hours have been defined by a major political resolution in Washington, which has, in turn, created a significant new problem for the market. We are witnessing a sharp divergence in assets. Value is in, tech is out. The government is back online, but the data is not. And cryptocurrency investors are pulling billions off the table. I will now analyze the key data and events. Yesterday's session on Wall Street, November 12th, ended with a clear and dramatic rotation. The narrative was not all stocks up or all stocks down. It was a story of optimism in the old economy and skepticism in the new. The Dow Jones Industrial Average was the star of the show. Driven by optimism over a political resolution, the Dow surged 0.7%, adding approximately 327 points. It closed above the 48,000 level for the first time in history, setting a new record high. However, the S&P 500 was nearly flat, finishing just 0.1% higher. And the Nasdaq Composite, home to the high-growth technology stocks that have led the market for so long, told the opposite story. The Nasdaq slipped 0.3% as investors pulled capital from names perceived as overvalued. This divergence is critical. It shows a market rotating out of growth and into value. Looking at the closing figures for Wednesday, November 12th, 2025, Dow Jones closed at a record high, settling around 48,254.96. S&P 500 finished marginally positive, around 6,853. Nasdaq Composite declined, closing around 23,400. This trend was visible globally. In Europe, the FTSE 100 in London also touched a new all-time high during Wednesday's trading before easing to close down 0.2%. The German DAX and French CAC 40, however, both finished strong, up 1.1%. As of this morning, November 13th, Asian markets are trading in a subdued, mixed fashion as they digest the implications of yesterday's news. The primary driver for the Dow's record high was a single macro-political event, the end of the 43-day U.S. government shutdown. Late Wednesday, President Donald Trump signed the spending package that was passed by the Senate on Tuesday and finally approved by the House. This ends the longest-running government shutdown in U.S. history. The market's reaction was immediate and targeted. The sectors that suffer most from economic disruption soared. Airlines were major winners. Shares of United Airlines and Delta Airlines both surged by approximately 5%. Banks and financials, which rely on a functioning economy, also hit new records. JP Morgan Chase and Goldman Sachs both closed at all-time highs. United Health Group was a top performer in the Dow. This was a classic risk-on move for the cyclical and value-oriented parts of the economy. The resolution removes a significant drag on economic confidence. While the shutdown's end is positive, it has left behind a critical problem, a data blackout. Today, November 13th, 2025, the Bureau of Labor Statistics was scheduled to release the October Consumer Price Index report. This inflation data is arguably the most important macroeconomic figure the Federal Reserve uses to set interest rate policy. However, the White House confirmed on Wednesday that due to the 43-day shutdown, October's critical inflation and jobs data will likely not be released. The Federal Reserve is now, as one analyst described it, flying blind. This is the primary reason for the market's anxiety. Without official inflation or employment data, it is nearly impossible to predict the Fed's next move. This uncertainty is a significant headwind for the market, particularly for interest rate-sensitive technology and growth stocks. The only recent labor data we have is the weak ADP private sector employment report from earlier in the week, which showed a cut of over 11,000 jobs per week in late October. This is an imperfect signal, but it points to a cooling economy that the Fed can no longer officially measure. Beyond the main headlines, several specific developments are impacting sentiment. Winner, advanced micro devices. The chipmaker was the top performer in the S&P 500, soaring 9%. This came after its Analyst Day, where the CEO projected insatiable demand for its AI chips and provided a very rosy long-term growth target. Loser, Paramount Skydance. The newly merged entertainment giant was the worst performer in the S&P 500, falling 7%. The company's first earnings report since the merger missed revenue forecasts, raising concerns about its valuation. The AI bubble fatigue. The rotation out of tech is being fueled by fears that the AI trade is overheated. This sentiment was reinforced earlier in the week by SoftBank's sale of its large stake in NVIDIA. Yesterday, other AI-related software stocks joined the downer. Oracle and Palantir both fell nearly 4% as investors questioned their high valuations. Oil, WTI crude prices sank more than 4% to settle at $58.45 per barrel. This reflects ongoing concerns about a global economic slowdown, despite the end of the U.S. shutdown. Gold, in a classic flight to safety move amid the data uncertainty, gold prices surged 2.2%, climbing to approximately $4,200 per ounce. Federal Reserve politics. In other political news, Atlanta Fed President Raphael Bostic announced on Wednesday that he will step down in February. This announcement comes amid what has been described as a persistent campaign by the Trump administration to exert influence over the central bank's policy, adding another layer of uncertainty to the Fed's future. The risk-off sentiment and macro uncertainty have hit the crypto market hard. The dominant headline is "Negative Crypto Sentiment Ignites Billions in Fund Outflows." Massive outflows. Digital asset investment products, particularly ETFs, saw one of the largest weekly withdrawals of the year. Over $1.3 billion was pulled from these funds last week. This indicates significant institutional caution. Bitcoin level. Bitcoin is struggling to hold its ground. As of yesterday's market close, Bitcoin was trading at approximately $101,500. This is down from a high of $105,000 and is testing the critical 100,000 support level. Macro impact. The data blackout is also muddying the water for Bitcoin. Crypto traders rely on inflation and jobs data to front-run the Fed. With that data gone, a key catalyst for Bitcoin has been removed. Altcoin outlier. While the majors are weak, one sector is showing unusual strength: privacy coins. Tokens like Zcash, Decred, and Monero have posted strong gains. Zcash, in particular, is reportedly up over 1,000% since the beginning of the fourth quarter. To summarize the last 24 hours, a political resolution. The 43-day government shutdown is over, which fueled a record-breaking rally in the Dow Jones, led by value and cyclical stocks. A data crisis. The shutdown has blinded the Federal Reserve. The cancellation of the October inflation and jobs reports creates profound uncertainty, which is punishing tech stocks. A crypto cooldown. Institutions are pulling billions from crypto assets as macro clarity has vanished, though privacy coins are bucking the trend. The market has traded one crisis for another. The immediate political gridlock is gone, but it has been replaced by a fundamental data gridlock that could impact markets for weeks to come. And that's all for this video. If you found information valuable, then do like, share, and subscribe. Thank you for watching.